Moving into the property market, I always start with the world's most livable index, and usually I only do the top 10, okay? But this year you can see I've put quite a few here. I think I've got about 15 on the list, and the reason is Australia got kicked out of the top 10 with just Melbourne sneaking in as equal 10th this year. Now Melbourne traditionally has always been the world's most livable city. It got nudged from 1 to 2, but during COVID it went to 9, which, let's face it, that's a miracle because it was on lockdown more than any other place in the world. And as a result, this year has gone to 10. Now, what COVID has done, as you can see, it's changed the index remarkably. You know, the number one place, Vienna, was 12th last year, now first. Now, Vienna has always been in that top 1-2, fighting it with Melbourne. So no surprise to see it come back. And in truth, I think Melbourne will have a similar rebound coming back into that top 10 higher up next year as COVID is a thing of the past. And it's incredible to think here in March 23 that COVID is pretty much done and dusted. But a year ago, I moved back to Perth and I had to go through quarantine rules to come back here. We were still wearing masks. We still had all sorts of issues. My favourite football team was in turmoil because they had half their players had COVID. The world was a mess. And all of a sudden, just 12 months later, it's all good. Back to normal. But you can see here, a lot of the ones that have jumped into that top 10, 15th, 18th, 16th, 39 for Frankfurt. Frankfurt has gone from 39th to 7th most livable. And Australia, poor old Sydney, went from 11th to 13th. Brisbane, 10th to 27th. Adelaide, 3rd to 30th. Not sure why. And Perth, 6th to 32nd. But just as a reference point, last year Auckland was number 1. This year it dropped to 34. So you can see just that little bit of inconvenience with COVID has had a massive impact in this ranking. But I do expect these cities that have been consistent top 10 performers to come back in, and particularly when it's so wonderful in Australia. And we're now allegedly COVID neutral, managed, whatever you want to call it, but it's not an issue anywhere. So it'll be interesting to see what happens with this next year, whether Australia regains its natural status or whether we've reshuffled the deck and it stays like that for a long time. This used to be, as I'd always point out, the best advertising in the world for people to move to Australia. So have we lost our advertising power as a result? That's going to be very interesting for me looking at next year's index and seeing if Australia regained its position. Moving forward, what that has meant as COVID is that we've seen a big population slowdown. We traditionally saw population growth at 1.6, 1.6, 1.4. That was leading the world. There's not many places in the world that were getting population growth rates to those levels. Roughly half net births, roughly half migration. So massive economic value in doing that, massive underpinning to the property markets, etc. But you can see during COVID, the December 2020, the first big year of COVID, we didn't go to the negative that they were expecting. We still grew at 0.5%, which was basically all net births. Okay? And in 21, we also came in at 0.5% growth, 128,000 more Australians, basically all of them in diapers. That's just how it is. But it's still quite strong numbers as we've now passed that 25 million mark and cruising towards 26. But this has always been the thing that I've said separates Australia, our consistent migration, our consistent population growth of affluent, happy, well-employed, well-paid, affluent people is our secret economic weapon. So to have this return back to normal is critical. And if we have a look at the reality, it is already occurring. Okay? So we're going to have this lag effect on the numbers because they do take quite a while to compile because apparently they're not digitized yet. But you can see here, during COVID, we had a big dip in our incoming migration, net overseas migration, but birth stayed quite consistent. And as a result, we actually went negative migration, negative population growth for a brief period. But interestingly, the government had forecast that our population growth would drop to 0.2. It did achieve that in the first year of 2021, but it predicted a 0.4% population growth in 21-22, and that actually came in at 1.1. So that was a significant uplift. They were expecting minus net overseas migration, 21.6, and that actually came in at 170. Now this is important because one of the key reasons for that minus was a huge student population left, a huge student population, primarily to China. And what happened, of course, is the universities all went online. Now, it really impacted Melbourne's property market because it's full of apartments that are small that students were living in. So it really had a negative impact on the vacancy, the rentals, etc. But interestingly, I just got back into the airport the other day from India on the day that China announced you were not allowed to study online anymore. And the airport was chock-a-block full of Chinese students all flooding back in to miss the deadlines. And so you've seen a re-influx of that student population. So you can expect this net overseas migration to have a hyper kick as all of those students have come back to finish their degrees, finish their studies, and start things back to COVID normal, life normal, Australia as the best place for them to hang out and see what happens. So expect that to have a very positive impact, particularly in Melbourne, but also in Sydney as that changes. But this migration is critical because we've been having issues with supply, and if you've got demand and supply problems at the same time, there's a lot of pressure in the market. So having soft demand helped us, but we still saw there was massive supply issues. If we have a look at the property market, it's definitely interesting times because probably the biggest influence in the market was the fact that interest rates going up took all of the steam out of the market. So you had the fact that interest rates going up, and more particularly the reporting of what that meant. Instead of saying, hey, we knew this was going to happen eventually, it started, don't worry, that was going to go. It was like, oh my gosh, why are they putting rates up? They said they wouldn't. Negative, the world will fall. But this was causing paralysis. Because it's so negative, everybody thought, I'll wait and see. I'll wait and see. Why? Because of the fact that you have a situation where emotions become overriding. Now, emotions do two things, fear and greed, right? So the fear is, oh, I better not buy because prices will go down. And greed, I'll wait till it's cheaper. Now, the problem is we have still very strong supply-demand issues, and so the property that we want to buy isn't coming cheaper for two reasons. Number one, there's still a huge amount of people that want to buy it, and number two, the people that are selling it say, I won't sell at that price. So what that means is supply contracts even further, and therefore in the high-end markets of owner-occupied stuff, we haven't seen the level of falls that the general market has. But the statistics report what has been transacted. And if the bigger properties aren't being transacted, we can't see the number. As a result, there's a big reality check. You want to go buy a bargain, you go looking for the property you've been looking for at a bargain, and there is no bargains to be had in that sector. So all of a sudden you go, wow, I better pay that price. We're seeing very high results in auctions. We're seeing high turnovers. We're seeing everything going in favour still of the seller in the main. Okay, we're not getting the top line prices we were, but the good stuff is still selling at very strong prices. And primarily because of the fact that supply is soft. Now with interest rates going up, that's going to be an interesting challenge because one of the reasons I could say I'll wait and see what happens before as a seller was because interest rates were so cheap, my holding cost was low. But what we are going to see over the next 6, 12, 18 months is people that were thinking about selling with a reasonable mortgage on their property are going to be far more motivated to sell because the cost of retention has just gone up from 2s and 3% to 5s and 6s. So that's going to be an interesting factor. Hopefully we'll bring more supply in, more willingness to transact, and we'll see what goes on. The issue though we have is that new build is problematic. It's still taking a long time to bring stock on, a long time for approvals. not enough stock to keep pace with the now new influx of migration. We just have supply problems and demand is strong and rising. So if you have soft supply and high demand, logic tells you prices will hold or rise. Simple as that. Now, one of the issues I find is governments of both sides are not addressing the supply issue. Things like I mentioned earlier with inflation. If you're serious about improving affordability, take GST off new constructed dwellings, apartments, new builds. There's no need for it to be there because the government makes the money on stamp duty already. And with prices now far, far higher than they ever were, they're making a small fortune. 6% stamp duty, 6% GST, 12% on every price is going to the state government. Stop it. Take one or the other, increase supply, reduce pressure, allow the population to be housed. But they are not addressing it because it doesn't suit their financial cause. They want as much money coming in as possible. They don't want to fix problems. What I see coming along is very, very quickly, everybody's going to lose patience and say, look, I've been waiting for price drops. I've been waiting for interest rates to slow. It's happened. I need somewhere to live. They have to go buy it. You can only put it off for so much longer. Now, where you can see that that's going to be forced upon many people is the rental market is in absolutely perilous state for tenants. If you do not own, your rent's going up 10, 15% in some cases. So guess what? You're going to be highly motivated to keep going because now there's a real issue, probably for the first time in Australia's history, that when your lease comes up, you may not get an automatic renewal. Before, always, oh yeah, you've been a great tenant, you've been here for a couple of years, modest rent rise, stay on, she'll be right. Now, I'm going to look at you and I'm going to go, my agent just told me I can get $200 more from somebody else. You're a nice person, but I'm taking the $200. Now that's going to be a big issue because people are being taken out of their comfort zone and they're going to have to act. And one of the ways they're going to do it is through ownership, if they can. But at a time when interest rates are higher, but still at the low range. There's going to be a lot of mental stress in Australia, but it's always been there. That's why it's under the NDIS apparently, paid for by the government. But this to me means we are moments away from the next kick in the property market. And don't be surprised if we have an above average year. But to me, probably the biggest elephant in the room when it comes to the property market is stamp duty and land tax. Stamp duty, as I mentioned, in regards to the double dip on new property. Land tax is becoming a major problem, particularly in New South Wales, where they're charging foreigners, including permanent residents, so not Australian citizens, a 4% of the market or the land value of the property each year. It's tens, if not hundreds of thousands of dollars some people are being charged because they've snuck the values up on paper. Now, most Australians don't know about land tax or care about land tax because it's not payable on your family home. But if you are an investor, if you are providing accommodation for a tenant, you are likely to be paying it because the values have been snuck up. And it's going to become a bigger and bigger and bigger issue. But because the majority of the people are owner occupiers, it's literally an impossible argument to win at government level because they're saying, you're a landlord, you can afford it, you collect rent. But I have clients that literally pay as much in land tax as they collect in rent, never mind the other expenses. It's getting out of control. Now, we'll have to see if anyone cares enough to make the changes necessary to do that, but we'll see. Stamp duty, similarly, they're getting that 5-6% stamp duty, but they're getting it on a much, much higher price today than that property was transacted for previously. Why? Why shouldn't it just be a flat $20,000 rather than, oh, we got $20,000 last time, but now the property's doubled, we get $40,000, $60,000. In some cases, in Sydney, you're buying a $3 million property, the stamp duty to transfer is near on $200,000. It's outrageous. It doesn't need to be there. How much does it cost to do that, to move that property? The services, they're already there in those areas. Nothing makes sense, but this is going to be the biggest battleground of property investment over the next 5 years, mark my words. If we look at where everywhere is on the market, we've got a situation where all the markets are pretty much exactly where they were last year. They were doing well, as we thought they would, and then with the aggressive interest rate rises from the RBA, it's all in paralysis. So I'm going to leave everything unchanged from last year because of interest rate paralysis. But mark my words, once people realise that we are still at the low end of the range of interest rates and that they need a property and it's not getting cheaper, that paralysis will be lifted and the market activity will be strong, particularly in those high population growth areas, in Queensland and Victoria as those students come back. Moving on, let's have a look at some of the numbers. And you can see here, the September quarter was absolutely atrocious across the property markets in Australia. Now, that's not surprising because the interest rates were being lifted aggressively, okay? And they've still gone up even more. So it's not surprising to see everything in red. But if we look at year on year, it's not quite bad. And the reason is, we had a very, very strong growth rate in the year prior. You can see, Brisbane came in at 23% to June 22. We've had Sydney doing 19, 15 the year before. So it's not surprising when we've had too much growth to give a little bit back. We're still well ahead of the trend. But okay, it's nerve-wracking if you've bought recently at these numbers, but if you've bought quality, you're not necessarily seeing those negative numbers. These are transactions, and I say a lot of the good stuff is not transacting, and if it is, it's not transacting at much less than before. So I don't think this is a general depiction of the market at the moment, because you've got buyer paralysis and you've got seller paralysis too. So I don't think we're going to see numbers of relevance through the September-December period. We're only going to see them March, June next year and see what happens. But you can see not a good year for the quarter, not too bad year on year, but overall, odd. If we have a look at the numbers across the thing from the REIA, the September quarter again, not good. But 1 year, Sydney was only down 2.8%. Melbourne fell 9%, largely because of that exodus of students, which is now coming back. And you'll see from the vacancy, it was over vacant in that market. But Brisbane, 13.8 year on year. Perth, 3.7 year on year, after giving back 2.8 recently. Adelaide, 18.8%. That's fantastic. But, not surprising these two are there. And again, if you look at the numbers we're doing over the years, Sydney is still 53% above the national average. Now, I think that's a little bit concerning, but where it's significant is this is the first time in the history of Australia that someone can sell out as a normal person in a market like Sydney, okay? And they can sell their home and they can use the proceeds from the sale to buy a replacement home in Brisbane, in Melbourne, in the Central Coast, in another suburb in Sydney, in a smaller apartment rather than a big house, in a downsizer. They can sell their home at above the average, national, buy at the average in another state or in another style, be debt-free, renovate, and still have significant capital left over in cash. That has never happened in the history of the Australian market before. So this realisation of significant uplift of Sydney and then distribution into other suburbs, other states, is the thing that is changing the property market more than any other thing, and the thing that most people have not yet figured out. Now that's going to have a ripple effect into Brisbane, where you can see that's why its prices have kicked up, because people have sold out of Sydney, moved to Brisbane, bought an amazing house, often twice as good as their previous one, for half the price, and still got cash left over. This is a change of behaviour. This is a change of circumstance. This is a change of market. And mark my words, this is a turning point in the Australian property market generally that benefits from that cash out and redistribution, and it will filter into Adelaide, as you see. It will filter to Perth. It's already got to Hobart. It's going to happen more and more consistently because Sydney is getting more and more congested, more and more overcrowded, more and more expensive, and these other places offer more and more lifestyle. So I can cash out, go live like a king in a castle rather than in a dungeon in Sydney. That's going to be a big influencer. If you have a look at the overall market from a rental point of view, and this to me is the biggest decider of risk, okay? Vacancy is the single thing that determines how much risk is in the market. And you can see here, if we look at the vacancy rates, Sydney, the Australian average 1.7, Sydney 1.5. Melbourne is high at 3.6 because that student population had left during COVID. But have a look, already just in this quarter, and this is to September 22, before the rules changed, right? And they've now come back. Melbourne had a 1% quarterly reduction in vacancy in just one quarter. Lower 1.9% year on year. So a year ago, this was 5.5%, which is well over the average. 3.6 is a little bit over the average, which is usually around 3%. But everywhere else is under the average. And that's a massive difference. And this is how you know there's not risk in the market, because the risk would come from oversupply, which would be demonstrated by vacancy. And these vacancies are extremely low, to the point where you can see in the rent increases, they're getting significant rent increases. So it's got to the point where it says, pay it or move. Now, I think that's quite repulsive. We have always said to our clients, please look after your tenant because they're looking after your asset. You want to be respectful, but the problem is there's the reality check that, mate, that's what you have to pay. And it doesn't matter how good a relationship I've got with a long-term tenant, at some point with interest rates rising, I'm going to be less as friendly as they want me to be. So we are at a very, very critical point in the market. And the only solution to this is more supply. But the problem is it takes a long time to bring on. If you have a look at why I'm thinking that, here is the key statistics to justify the market. You can see here home loan financing fell off the cliff, okay? That's because people are putting on procrastination button. They're saying, no point going getting a loan, interest rates are going up, let's see what happens. So no surprise that financing has come off because they're waiting. But the problem is they're not exiting, they're waiting. And that's the problem. Those 1,000 people that were going to buy last year that didn't, they combine with this year's 1,000 people to have 2,000 people looking for a property. So we've doubled demand because we had a pause last year. It's a cumulative impact. We're not getting rid of these people. They didn't disappear. They've just delayed the decision and they've joined next year's bunch. So this is not surprising that they've done that. Interest rates are a scary thing. But when they wake up and go, oh, I can still afford it and it's still at the low end and I need that property and that property isn't getting any cheaper, the pause comes off and away we go. But the problem here is the supply. And you can see here the approvals has fallen off the cliff. Now, what we would need at a time like now is while people aren't buying, we would need to build more. That's what we should be doing. But we're building less. And that's the problem. We should be supporting construction industries. We should be supporting new acquisition. We should be reducing the cost of new property, but we're not. We're making it just as hard and hoping it solves itself out. It won't. We need quality supply in good areas and no one is doing anything about it. Now, that's bad news if you're looking to buy something you don't already have. It's wonderful news if you already own it. So if you're an investor in a quality property in a quality suburb, hip, hip, hooray. If you're waiting to get in there, step up with courage and go for it. You just need to. If we look at that, people are more wealthy, now, so they can afford these prices. And particularly when we're releasing that cash out of the likes of New South Wales, we're releasing the cash from migrants coming in from Hong Kong, from Russia, from UK, from Singapore, from all over the place, with expats coming back far, far more often with savings of significant sums. And you see, we're more wealthy, we've got more willingness. The house price drop is lack of transaction to me rather than real reduction. But we'll see what the next 12 months. Now I'm going to predict with the housing, I think we're going to have a pretty good year once people figure out that we're still at the lower end of the interest rate historical cycle. Once they realise that there's no supply coming into the market, and when everybody says, I need that property, I need somewhere to live, and my landlord's kicking me out, we're going to have a perfect storm that's going to have another fairly high push to price point. Now, I hope it's not another 15, 20% growth that we had a year or two ago. That's too much in one single period, and hence why we gave some back. But it should be that 5 to 10% growth coming through, which is manageable, affordable, and gives people still the hope and aspiration that they can get their property eventually. So a decent year, 5 to 10%, pretty much across the board, with a lot of capital to be released out of the Sydney market and find its way, particularly to Queensland, particularly into the other markets, coastal, etc. So look for value, look for quality. That's the protection point.